All right, everyone. Thanks for joining me again today. Quickly wanted to just review the ignorant and misinforming presentation that Goldman Sachs did yesterday. This came out, the presentation that they brought on for their clients that wanted to know about Bitcoin and cryptocurrency. So I just wanted to review a couple of their bullet points and, see how misleading it is to stuff that they've indicated to us previously. So going through here really quickly, the first one we got is they said that cryptocurrency and Bitcoin is not an asset class because it does not generate cash flow like bonds. First of all, it's not a bond. It wasn't designed to perform like a bond. But secondly, proof of stake coins, as you can see here, do provide a consistent payout. Just right here on my Coinbase, every 2-3 days they pay out a consistent dividend based on your staking with them. So I don't know about you, but that's cash flow, right? That looks like cash flow, cash inflow to me. So next up, what do we got? They say they do not generate any earnings through exposure to global economic growth. Well, once again, not really what it was designed to do at all, any of the cryptocurrencies. Secondly, we're not at a mass adoption point yet. So where are we going to see any kind of earnings or global economic growth, exposure, stuff like that? It's just an irrelevant point to make. Third, what do we have? They do not provide consistent diversification benefits given their unstable correlations. Well, if you want to diversify away from the world of finance, investors over and over and over look for something that's uncorrelated. And as you can see here with this chart, this is over, what do we got here? A little over a year's time of correlation. This article came out last year. You can see the S&P 500 is the orange line, BTC being the yellow line, and they consistently move almost opposite direction of each other, as you can see with them consistently crossing over. Here, a huge difference. So, I mean, that looks fairly uncorrelated to me. So if you wanted to get uncorrelated with the stock market, Bitcoin seems to do that fairly consistently. All right, what's our next point that they made? They say that it does not dampen volatility, given historical volatility of 76%. Cool. Okay. Yeah, Bitcoin's very volatile. That's part of the reason why people are drawn to this asset class, because they're tired of the slow, laggy returns that are seen in the stock market with the 10% gains on average per year. Yeah, I guess that's okay. Safe, whatever. But, I mean, it's not really safe, and it looks like one big giant bubble to me. But anyway, it does not dampen volatility. Well, Goldman Sachs wrote an article in 2007 talking about how volatility can be used as an asset, right? And this is talking about equity volatility and using it to trade or hedge the equity market as a whole. All right, and what's another point that they got here for us? I'll say, okay, so they say that it does not show evidence of hedging inflation. Okay, no evidence of hedging inflation. Well, since Bitcoin's existence, there's been no better performing asset class. As you can see, looking at this chart, it's done, over time, it's done nothing but go up in dollar valuation. So what better asset class, or what better thing to invest in that's something that's consistently dominating the dollar? That looks to me like a hedge against inflation. All right. Lastly, what else do we have here? Oh, they say that on March 12th, back to the volatility, on March 12th, the price of Bitcoin fell 37% in one day. But what they fail to mention is that after that 37% fall, since then, it's recovered 136%. So your argument, once again, okay, it went down, but it's back up and now it's fully recovered, whereas the stock market hasn't, even though you're just pumping trillions of dollars into it. So the arguments are fairly misleading, but once again, that's because Goldman Sachs can't make any money off of crypto. There's nothing to sell to their clients when it comes to this asset class. Financial advisors, not really much money to be made there. And also they would be selling their assets that they have with Goldman Sachs to move into an asset class that's not profitable for them. So of course they're going to put out this misleading information, but it's because they have an ulterior motive, right? So yeah, I just wanted to quickly cover this silly presentation. Obviously everyone's going to have their own opinion, but if you could definitely spend a lot of time debunking basically every point that they made. But yeah, thanks for watching.